What happens with traders is they're eager to make money. And so they read something, they see a video, and boom, they want to go into the market and start taking risk. So the big part of psychological issues in trading come from the fact that traders don't go through proper training and end up putting on risk way too early. Even the best traders I've worked with, they have bad days. They have losing periods in the market. Step back from P&L and learn. I messed this up. I didn't see this. What can I learn from it? How can I not mess up tomorrow? If day after day, all you're rehearsing, all you're thinking about is losing, why I lost money here, what I did wrong here, what are you internalizing? You're internalizing that you're a loser. You won't always have a positive trading P&L, but you always need to have a positive learning P&L.
What's up, guys? This is David, aka Reverse Long, and today I have the pleasure of having Dr. Steenbarger on the podcast. It's the first time I have Dr. Steenbarger on the podcast, and I've been meaning to do this. I've read all his books, and I'm very excited to have him on. And Dr. Steenbarger, for those that don't know, he's the professor of behavioral science and psychiatry at SUNY Upstate Medical University at Syracuse. I think I got that right. So Dr. Steenbarger is the go-to guy for everything trading psychology related. He has several books. I have them on my shelf under this desk right here. I've read them all several times. And the latest one is Positive Trading Psychology. I got it on audio the day it came out. It was actually, pre-order, just February 24th, I believe. So just about a week or two ago. And it's amazing. It's worth a couple listen tos, a couple reads, and these are like timeless books, so you can always revisit them. And here we go. We got Dr. Steenbarger. Oh, by the way, I met Dr. Steenbarger through my publisher. We have a mutual publisher, Harriman House, the best in the game, the best in the business. And I have an upcoming book as well with them, Short Selling Master. And when I reached out to them to get connected with Breet Steenbarger, Dr. S, as a lot of people refer to him as, it was an honor. It was an honor because this is someone that I've read all his books and has had a tremendous impact on my trading, and especially to the retail world. We don't have much information out there for us at our disposal like the pros do, and so it's essential to get the right mindset for trading and the right personal growth attributes, for your trading, and to just grow as a trader and have the best results. So with that, Dr. Steenbarger, how you doing?
Doing well. Thanks a lot for having me, David. It's great to be here, and I'm looking forward to your book.
Awesome. Thank you. Thank you. So to get started with this, so positive trading psychology. So what drove you to write this book? Because you've written several trading psychology books. So what sets this one apart, and like what drove you to write this one?
Yeah, so I teach positive psychology in my academic role. In my work as a trading coach, I work exclusively with hedge funds and portfolio management teams. And what I've seen working with professional traders is that the problems that we often hear about in trading psychology, like going on tilt and revenge trading and fear and greed, those don't happen with the traders I work with. That's not what they work on. That's not what's in their heads. What they are working on is building upon their successes. The reason they are at a major multi-strat hedge fund is because they've already been successful, but now they want to build on those successes. They need to figure out what makes them successful and how they can build upon that. And so that fits very well with positive psychology, which is the psychology of our strengths, the psychology of who we are at our best. And so applying the positive psychology to the work I do with traders has been very rewarding. And I decided to write a book to capture some of that.
Awesome. So with going with that, so you mentioned that these professional traders, they don't go on tilt and they don't have FOMO. And I have on my notes here from your book, you were speaking about surgeons not going on tilt and FOMO. So, so what like so can you elaborate on that? So like, professionals, they don't get this because their training is so they're so grounded in their training that they don't
That's
behave that
exactly
way.
right. That's
Yeah.
exactly right. And I've seen it firsthand teaching at the medical school. The training takes place over many years. And when you first start, a medical student, a third year medical student, is learning from fourth year medical students and junior residents. And then a fourth year medical student is learning from the junior resident and a senior resident. And the junior resident is learning from a senior resident and an attending physician. You always have multiple mentors. You're always learning. And you really don't get your certification. You don't get the opportunity to practice independently until you've trained for a number of years. And every day you're watching people do what they do. You're being supervised by those people in trying your hand at what you do. And that ongoing training helps internalize skills and build upon our talents. What happens with traders is they're eager to make money. And so they read something, they see a video, and boom, they want to go into the market and start taking risk. It'd be like someone excited about surgery and he reads about surgery and he wants the next week or the next month, he wants to go in and start cutting. Well, that's not going to go well. So the big part of psychological issues in trading come from the fact that traders don't go through proper training and end up putting on risk way too early.
It's so interesting, those analogies and how those analogies work so well. So, when I got started trading, I had to, I'm basically an autodidact. I was just like going at it on my own. And then I met a community of traders like on chance when I was successful enough to move to Puerto Rico, and Puerto Rico is like a haven of traders. And then finally, like I met a couple of people, just one or two, and I was like, wow, what an epiphany it was. And we're sharing ideas, and like I was able to grow so much faster in a short amount of time than all those 2 or 3 years on my own, figuring it out in the dark. And so when you mentioned in your book, and it's what you're touching upon here about the each one, what is it, each one teach one? I was
That's
like,
right.
man, this is like, this is the way, it's like you can go at it on your own, but if you have, let's like a pod, the pros do it in a pod, 6 people, and you're just growing so fast, like exponentially. It's the way. And once I got like, it was like an epiphany. It was like, wow. It was like and I was loving it. I was loving the speaking about trading and encountering my encounters with these other traders, and I was just so excited. So like a group of people, and they were the same way. So a group of people, 6 people or so, for example, all excited to get better, and they all are aligned with the same mindset. And when they discover something, they share it with another. It's just like a reciprocity. I think that's how you say it.
Yep.
Yeah, it's like that is essential, and that's what the pros are doing. That's what they're doing at these multi-strat hedge funds. So, but when did you realize that this is like, did it just happen? Like you just connected it with the medical field? Like this is what's going on in the med school. They're doing the same thing, and in the multi-strat hedge funds, that's what they're doing. Because like retail is completely missing out on this. It's very hard because a lot of traders think they can just go at it on their own. They just put a laptop on or just trade from anywhere on their own, or trade in their small office or home. And they're missing out on this whole thing of just 6 people, each one teach one, learn from each other, and you take it to the next level. So what, like, any thoughts on that? Like why people have a hard time with this on their own?
Yeah, it's a great question, but I think your example, David, is a perfect one. You were in a situation where you could have just tried to learn it on your own, but you connected with others in a pod of six. And the thing that you said that was so important is that all of you enjoyed learning together. You were stimulating each other. And so, even though there are natural frustrations when we are learning trading and we lose money occasionally, the stimulation of working with a team keeps you going, and advances your learning. But to do that, you have to be willing to reach out and you have to get out of your own head, so to speak, and be humble enough to realize that I don't have the answers and I need to learn with others and from others. And so that's what happens naturally in hedge funds, because junior traders join a team and there's teamwork and everyone's learning from each other on the team. There's role modeling, and they could go a few years before they actually start managing risk on their own.
Yeah, and before we move on to the next discussion topic, I just wanted to point out too. So, um, I've I know you've worked with Trillium because with Lance Brightstein and Trillium, and yeah, that's how I know you from. Before I started reading your books. And there's one, I gave a lecture at the University of Florida last year, and there was a couple of Trillium recruits. And we became friends. And I caught up with them just like a few months later after they joined Trillium. And I was like, whoa, like they sped up so fast. And like they were, is they're one of the traders was like, oh, I got to go into the office, work on, I'm with my pod, and we're doing this and breaking news and this and this, and I'm so fast with the keyboard, and I'm like, wow, this guy's moving along fast, and it clicked right away. I was like, they're all teaching each other in there, and they're all growing like really, they're working they're moving fast because it's the each one teach one. It's on the next thing I'm going to mention now, the 90 days to change is one, like practicing something for 90 days. I saw this trader uh, a few months later, and I'm sure for that amount of time, he's been practicing that breaking news so fast on the keyboard, like trying to be so fast. Because like I never knew you could be that fast with breaking news. Like he's practicing that every single day. And with other people behind him telling him, "Hey, what are you doing with your hands? Put your hands back there." He told me the whole thing. And I was like, wow, this is some serious stuff. So like it's like a culture and they're all excited. You should have seen his eyes light up with like so much, like he loves this. Like he's like in the world now with several others or a whole team that enjoy it just like him, and they're just on the path to like, this is why it's a higher odds in my understanding here, that higher odds that the professionals that or the recruits um they have a higher chance to succeed because, for example, retail trading, I mean, I want to get your thoughts on this. So retail traders have a lower odds to succeed, because they don't have this mindset, or they're not aware of it. They're just not aware. Like they're not aware that like the each one teach one, the 90 and 90 days to change. That professionals are so grounded in their training, they don't get FOMO. Like they're just retail. By the time they find this out, they're they're already potentially bled out their accounts, unfortunately. And that's another thing. Oh, I think you have the quote. I think this comes from you. Um, you got to survive your learning curve. I think that you're
Mm-hmm.
the
Mm-hmm.
yeah. So it's like it's all so important to understand. So yeah, any thoughts on that, especially the 90 days. I found that so great. Like, if you want to practice something, you journal for 90 days. You do something for 90 days and it just becomes ingrained in you. It's like a version of getting grounded in your training. Yeah, you want to elaborate maybe?
Oh, absolutely. Let me back up though, because I have not worked with Trillium. The way I know Lance Brightstein is through SMB Capital. Um, and Lance has been putting out videos to help mentor developing traders and has a whole course for that. And that could be a great focus for people to team up, people who want to learn his methods. And by the way, he was recently named A Market Wizard by
That's
Tom
right.
Tiger. Yeah.
Yeah, that's right.
So here's a chance to learn with and from a market wizard, team up with people, like you say, in a pod, make the learning exciting, and that accelerates the growth curve. The 90 days of repetition, where that actually comes from is AA, Alcoholics Anonymous. When people really want to change their drinking habits, they are strongly encouraged to attend 90 meetings in 90 days. And what that does is day after day after day, you're rehearsing a new mindset, a sobriety mindset. And after a while, you internalize that. It becomes part of you. And so that same principle applies to trading, that if we practice something again and again and again and again, eventually it becomes our skill, a natural part of us, and we don't have to fight FOMO and greed because we've already internalized the right trading processes.
Excellent. And going with the rehearsal, so mental rehearsal and journaling. So I remember you mentioning about journaling your winning trades and journaling your losing trades. So like by journaling your a lot of traders know just to journal their losing trades. They get the lessons that
Yep.
they paid for basically through the loss. Now, for journaling your winning trades, is that so you can practice that mental rehearsal of the things you did right to get to that winning trade? And how important is it to get to journal your winning trades and your, in addition to your losing trades?
Totally important. And this really gets at the essence of the positive trading psychology that I talk about in the book. If day after day after day after day, all you're rehearsing, all you're thinking about is losing, 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 why I lost money here, what I did wrong here, what are you internalizing? You're internalizing that you're a loser. If that's all you focus on, how are you going to build confidence out of that? When you do something right, you want to reverse engineer that. You want to figure out, how did I do that? What did I do well? And you look at that again and again, day after day after day, what I did well, what I did well. And pretty soon you're internalizing your best trading practices. That's what's going to make us successful.
And for example, like how deep do should the traders do their winning trades? Like for example, for a long time, I journaled my losing trades, every single aspect about it, trying to find a
Mhm.
common denominator between the losses. Do the losing trades and the winning trades, should they be journaled equally, or more emphasis on the losing than the winning? Or like how does that work?
I like it equally. And I often talk about the minimum journal format each day. What one thing did I do well that I want to set as a goal to repeat again, to build upon? And what one thing did I not do well that I want to correct that I'll set as a goal for tomorrow? Just that. But every single day, one good thing that I can build upon, one thing I want to correct that I can learn from again, 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 day after day. And that's a lot of compounded learning. So I would say equal, because we want to learn from what we do well, not just correct ourselves when we fall short.
And okay, so also video journaling. I know S&P does the daily report card and the journaling. So is there like a sequence to do it, or just like daily report cards good enough? Or because like for me personally, I like to do multiple and let that compound. I'm pretty sure
That's
that's
a
what
good
the
point.
pros are doing.
Yeah, that's a
So
good point. And there is research actually in psychology that if we learn in multiple ways, if we learn by writing, learn by talking out loud, learn by hearing others, we're much more likely to internalize that learning and have it stick. So journaling in different ways, interacting about journaling, about what we journal, that helps us with the learning process. One of the things I talk about that is a big part of the coaching work I do with traders is called the solution focus. And what that means is when you are not losing money, when you're not making your trading mistakes, what might you be doing right? In other words, many times our best practices, our most positive trading occurs when we're not making our usual mistakes. If you stayed in a good frame of mind and managed risk very well in a volatile market, you want to reverse engineer that. How did I do that? There must have been something I did right. So you're learning from the occasions when you're not making your trading mistakes, because many times that's revealing your strengths.
Yeah, it's important because so as you were saying that, explaining it, what was going through my mind was several streaks that I had, and I was unaware, in the past, and I was unaware of what was why those streaks were occurring. And it's important, like now, as with a lot more experience, and I'm aware of this phenomenon, I would go back and reverse engineer why was I in a good streak? Was it my mindset? Was it certain things that I was doing that I like routinely, like on automatic? Like I need to do that more. I need to find what I was doing, like, and do that, replicate that more.
Yes. And many times people go on a streak because they do well trading certain kinds of market conditions. Like right now, as we're talking, the overall stock market averages in the US have been pretty much in a range, different sectors doing different things. It's the volatility has picked up, but very different from the kind of markets we had just a year ago. So sometimes we do well, we go on a streak because our techniques, our approaches to trading work better in some markets than in others. So, for example, at SMB, where they talk about having a playbook for trading the market, figuring out where the opportunities are and how you're going to trade those opportunities, you really need a separate playbook for different market conditions. Are we in a narrow range, low volatility? Are we in a trending market? Are we in a volatile, choppy market? You need playbooks for all of those so that you can adapt and make money in different ways in different markets.
Excellent. So a few things there. So you touched on before about the compound effect. So by compounding different strategies and just expanding your playbook, you can make more money as well. Because um, I used to think, and I'm pretty sure a lot of traders, that are watching this, is that, it's like you got to just make more, size up more with your strategy, size up more, and that's how you make more money. But although that is somewhat true, you can also just expand your playbook. You just compound all the good stuff that you just mentioned, and it's just adding to your playbook as well, just compounding. It's like, so just, it's so uh important, like how the understanding that the compound effect starts so small, but if you do these small things all the time, it just, you look back in not too long of a period and you see this enormous change, so
Yep.
yeah,
Can you imagine? Can you imagine a developing baseball pitcher has a good fastball, and so I'm going to work on my fastball, and I'm going to get faster, and I'm going to get faster, and I'm going to get faster, and I'm going to practice it and practice it. What the heck?
yeah,
The pitcher is better off working on the fastball, but also developing some off-speed pitches, developing a curveball, because different hitters have different vulnerabilities. And so you want to be able to pitch to different batters in different ways. It's the exact same way with the market. Just practicing the one thing that you're doing well and do more and more and more of the same thing leaves you vulnerable when markets change. So what I talk about in the book is getting bigger in your trading by getting broader,
mhm.
learning different strategies for different markets, sizing them all up gradually so that we have a balanced learning and a balanced performance.
Yeah, so more strategies. So how many strategies would you say is ideal for a beginning trader? You start with one and then you just slowly over time your playbook can, I mean, is it infinite strategies? I mean, I have about a dozen or so. You know, how much
Yeah,
is too much?
yeah, and that could be distracting. But in the beginning, when traders are first learning, many times, excuse me, they'll have different mentors and they'll learn different strategies from different mentors. And so they might have a strategy that helps them trade breaking news, as you mentioned. They might have a strategy that helps them trade breakouts of ranges. They might have a strategy that helps them trade reversals in choppy markets, et cetera, et cetera, et cetera. But there'll be a handful of strategies that they can practice in the beginning. And then gradually, as they get good at those, they can start building.
Awesome. And so also going back to the journaling aspect, so with recording. So when you in the book, you're talking about recording, like you're coaching yourself. So how important is that? Like, to coach yourself through journaling. I think having that, like understanding that you're talking to yourself and you're coaching yourself, as well as doing all these other things, uh, you to get better at your trading.
Yeah, part of the recording obviously is to review performance and figure out what you could do better and so forth, so on. But reviewing markets is important. Reviewing markets is reviewing markets, seeing them again, but this time outside of market hours. And we can look at how moves developed over time, how we could have identified that, how we would want to trade that. So traders I've worked with will stay after the market close. They have a replay function on their machines, and they will replay the trading day, just like athletes, like on a football team, will review game film. They will review how the market traded, where the opportunities were. They'll make notes again, 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 day after day, and that cements the learning and development.
You mentioned the football videos that they watch the film, and I know some football players, some NFL athletes. I have a social club across the street that I go to,
Yep,
and I didn't realize how much film they actually watch. They spend a lot of time in the film room. It's like a very important part of their practice. So it's not just physical practice, but they're also practicing through film.
it's
And
huge.
yeah.
It's huge. Yeah, yeah. And basketball as well. They'll look at game film, and the coach will stop it and look what's happening here. Well, wait, you're positioned over here. Why? What are you doing over here? You should be, coming down and screening down. So you learn, you learn, you learn, you observe, you observe, you observe. It's a great way to cement learning.
Yeah. And so I wanted to also speak. Okay, so your book is called Positive Trading Psychology. So what about the negative thoughts that people have? How do you challenge negative thinking? Because this is something everyone goes through, some more than others. So how, like the negative thoughts that creep into your head, the challenge, um, your progress in trading. Let's say you had a couple, especially as a beginning trader, you had a couple losing trades, and then now you're thinking of like you're questioning your whole career. You're questioning, can I do this? It's so hard. Like you're questioning so much, and it's just like negative thought after negative thought after negative thought. And then as an advanced trader, um, I still have some negative thoughts. Everybody has negative thoughts. So how do you challenge that to get the best performance?
Yeah, even the best traders I've worked with, people at hedge funds who are managing hundreds of millions or $1 billion or more in capital, they have bad days. They have bad, losing periods in the market. And yes, they're achievement oriented. They feel really bad about that. But the key that I describe in the book is everything is learning. If we do something well, we can learn from it. If we mess up, we can learn from it. We want to step back from P&L, and this is why it's important to trade small in the beginning. Step back from P&L and learn, learn, learn. I messed this up. I didn't see this. What can I learn from it? How can I not mess up tomorrow? So you're embracing the loss as a learning opportunity. What I've often said to traders is you won't always have a positive trading P&L, but you always need to have a positive learning P&L. And that way, a loss on a trade is not a total loss.
And now also about the percentages and rather than dollars. So I remember you saying something about thinking in terms of percentages rather than dollars. Is that to go in line with the learning too? Is like when you're focused on the amount of percent you made on the trade rather than a dollar, because the dollar you might compare it to someone else and you might that person is coming from a different place, maybe a different account size, different experience, different everything, and it can affect the negative thoughts that go through your head as far as the competitiveness, rather than thinking of in percentages clear. If you made a good trade, it's a good trade, and now you're thinking about the positive things about it rather than the dollar amount, which is misleading a lot of times. Yeah, what do you think?
Yeah, especially when we're growing our size. If you're learning and doing well as a developing trader, you're going to build your size. And so you start out trading X and X amount of capital, and then you might go to X plus 20%, X plus 40%, X plus 60%. You increase the sizing of your trades. If you think of it in dollar terms, that could be intimidating. If you're thinking in percentage terms, well, I'm willing to risk 10 basis points, a tenth of a percent on this particular idea. I think it's breaking out. I want a tight stop. I'm willing to risk 10 basis points on this trade. That's whether I have a big account or a small account. It's 10 basis points is 10 basis points. So it normalizes our thinking about the risk.
Excellent. And I wanted to also ask you about, I found it very inspiring. It's like leveraging, your future self will leverage what you do greatly. So can you expound on that? I think it's a great thing for everyone to understand.
Yeah, we are building our future. And you want to think about this future that you're building. Turns out one of the most important ingredients of success in trading is a trait that psychologists call entrepreneurialism. The really great traders are entrepreneurs. They're building a business. They not only have positive feelings about their trading, they're not only profit oriented, but they are visionary. They're building something for the future. And by focusing on that future self and what you're building in your trading business and making that meaningful, trading all of a sudden becomes not only enjoyable, but inspiring.
Beautiful. So, Dr. Steenbarger, so where can people find you? I know you have the traderfeed.blogspot.com, and of course the book Positive Trading Psychology, which I'll have in the show notes. And yeah, maybe where I know X, you're on X.
I definitely am active on X, and I post to my blog, Trader Feed, TraderFeed, just about every day. And so that's a great way of catching up on some ideas that I'm working on with traders and trading teams
Wow, so on traderfeed.blogspot, you're on there like all the time? Like you're writing.
every day,
Oh, wow. Okay,
just about.
I
Yeah,
gotta
yeah,
get more
yeah.
involved. Yeah.
Yeah. So, yeah, and putting out different ideas that come to me as I work with different kinds of traders and as I learn from my own experience.
Awesome. And yeah, that about wraps it up. I really encourage everyone to grab Dr. S's book, Positive Trading Psychology. It's out now. It just came out a week and a half ago. Is that correct? Is
That's
that
right. Yeah.
is yeah, it's fresh. And one of these timeless books. This is a book is timeless, so you can read it over and over throughout your trading journey. And it's I found Dr. Steenbarger's books good to revisit at different periods in your trading journey. It's just like, yeah, it's just not just a one and done. You can revisit these and reflect on them. They're great. But yeah, go get it. And thank you, Dr. Steenbarger, for joining us. And yeah, I'm looking forward to more of your blogs and everything you got going on. Thank you.
Well, thank you very much, David. It's been great speaking with you.
That concludes today's episode. Make sure to like and subscribe to the channel on the platform you use. The Friendly Bear Podcast is hosted by me, David, where you can find me on Twitter at reverse_long. You can find the Friendly Bear Podcast at www.friendlybearpodcast.com, as well as on Apple Podcasts, Spotify, Audible, Amazon Music, and YouTube at The Friendly Bear, Verified Trader. Until next time, thank you for listening to the Friendly Bear Podcast.